Hello everyone. Today we are going to discuss about three things in different sections of video. I'll be making a different video for each topic. So right now we'll discuss about the Indian markets. Happy Diwali to all of you. There could be some disturbance because of the ongoing festival and crackers. Please bear with that. So I was discussing about the market. Over the past 1 year, from Samvat 2081 to 2082, which is tomorrow. Tomorrow we have Murat trading. And over the past 1 year, not only Indian but global markets have also seen quite ups and downs. And this video will focus upon the domestic things. So last 1 year had been exciting for the market in terms of gains. I don't think we have moved really in terms of points or percentage on a Nifty index. Not much. It was kind of flat returns. But there are significant changes which are undergoing, which are ongoing. Particularly, I would just discuss about the domestic things which are linked to the international, of course. The Operation Sindoor, which took place in the month of May, have changed a lot of things in terms of policy, in terms of perception, and the defense sector found a new, what I would say, a new era from the Operation Sindoor, and it is likely to continue. Operation Sindoor is also active right now, and this defense related things will continue in the future. There are some structural changes undergoing. I would like to point out few things which are related to tariff and all those things, but in terms of domestic importance. RBI governor, and I would say as an institution, RBI have categorically pointed out that we need to have currency infrastructure which allows trade in pairs of INR, that is Indian rupee, apart from USD INR. Right now, major currency which is traded in the domestic market or taken as a reference is USD INR. As dollar is traded with almost all the currencies in this world, so ultimately if you have liquidity with the dollar, ultimately the conversion can be done because dollar has liquidity with all the other currencies. So RBI categorically pointed out that we need to have infrastructure where other currencies, like other pairs of currencies, Japanese yen, yuan, Russian ruble, and so on, can be traded in rupees pair, like USD INR, yen INR, yuan INR, and so on. I want to highlight that financial markets down the line can go significant, financial markets can go into significant changes in terms of regulatory and also in terms of development. Forward-looking things are moving on, and this will impact capital markets definitely. But this structural change will find many new takers. There will be some changes in the banking, in the financial markets, whether it is capital, insurance, forex. Many changes are likely to happen down the line. This will change a lot of things. I can just just point out this. I cannot go into the pinpointing what could be the changes. I cannot do that. I'm not capable to do that. But this hint is definitely pointing out to some deeper forthcoming changes in the financial markets. Now, when I look at DII and FIIs, we have a situation where DIIs are consistently buying into the Indian capital markets, and the wealth, kind of wealth which we used to call so-called wealth, that definition is undergoing a rapid change. So people are looking at financial assets as a viable alternative to many real assets like real estate, gold, land, and it's more reliable. That is also one of the what I would say a characteristic which is visible now in the masses. So the Indian markets are having this premium because of the liquidity that is been getting channelized into capital markets every month through the SIPs and lump sum investment, and it is likely to continue. That's why the markets are having this premium. Certain amount of premium is there. Well, it is not, my personal opinion, it's not harmful. It may not create any structural problem, but there could be a correction intermittently to find a real value. But this liquidity which domestic institutions and the masses have started, it will continue for a very long time, and this will ultimately benefit Indian companies. We should also note that wealth management is emerging as a new sector. Altogether, it has already emerged as a sector, but there are many more opportunities we could find, and this could be one of the very interesting sectors to look after in new year and I would say in upcoming years. So that is one point I want to highlight. Let's discuss about the other markets. Like we have down the line, I think bond market, foreign exchange of currencies, corporate bond market, these could also see some structural changes. There are some talks going on in this context. This will be beneficial for economy at large, because we need to have a very robust market for corporate bonds. For government securities we already have, but the foreign holding of Indian government securities should be made more easy, more liquid, and it's a very, very big market, and that would give India much needed leverage when we need a very strong capital expenditure in coming years. There are ongoing expansions in railways, port sector, shipbuilding. Already have one video on shipbuilding. The electric infrastructure, roadways, inland waterways, Lot of mobility related things are coming up, metros and so on. So these things require capex, and it's a long-term capex. Apart from that, some infrastructure which need to be developed for modern industries like semiconductor. What you require in semiconductor is a stable set of electricity. A stable power supply is a basic need of such high-end sectors. Now we are looking at semiconductor sector in a very different sense, and also when we look at the manufacturing, electricity is something that is a very common denominator of almost all industries. So that thing is already happening, and it is continue to happen in coming years. So electric related, infrastructure related companies and sectors are likely to see a much more activities. Then we are also looking at digitization, AI, data centers. I am only highlighting the domestic thing. On a specific things, we'll make a different video. So India turning out to be a AI hub, not only in terms of consumption but also in terms of designing AI solutions, data centers, and tier 2, tier 3 cities already having a very strong growth momentum. These new things, AI data center and data center infra, will find a lot of takers in near tier 2 and tier 3 cities. Sorry for this interruption, but can't help. Recently, Google is planning to host one of the biggest data centers in India, in Andhra Pradesh, Visakhapatnam, Vizag. Vizag is, I don't know the exact category, but it's a tier 1 city, I would say. Tier 1, tier 2 city. So this is likely to be the trend. Cities like Vizag, Bhubaneswar, Chandigarh, Mohali, Jaipur, Vadodara, Nagpur, Aurangabad, then North Kanpur, then we have Shimla, a lot of cities. I mean, I just wanted to highlight the size, Indore, Bhopal. These such cities, there are so many cities in India like this. These cities would be the next wave of growth. So data center related, IT, GCC, global capability centers will find a lot of takers in these cities, and it's no wonder that we should focus on these cities. Government is already having a plans to boost tier 2, tier 3 cities where a new age companies, new tech companies are should open their offices in tier 2 and tier 3 cities, thereby developing infrastructure, much needed infrastructure and opportunities of employment in these cities. Well, we have this very much boom ongoing in India in terms of urbanization. This should have another video to discuss anyway. But yes, this is on the domestic front. I mean, it's a part of markets. A lot of e-commerce companies, food delivery applications, branded stores are penetrating into tier 2 and tier 3 cities very aggressively. It's a very big market, very big market for, I mean, wealth management, capital market, and host of all other demands or the modern infrastructure, the modern lifestyle. These are the new pockets, these are the new demand centers, and that would drive the growth of India in next decade. So it's been a very interesting year. India is emerging as a new hub for many things. To point out one very important thing, Vizhinjam port in Kerala is first transshipment port of its kind which India is having, and it's operational. This is unprecedented changes, and this will drive changes in lot of other areas of logistics, of industries, manufacturing, and other things. It's just a starting point, and India already is at a very sweet spot geopolitically because of the global development. I'll discuss that in another video. Right now we'll just focus on the domestic things. Stable government, stable taxation system favors economic growth, and stable policy regime across India would benefit the businesses. Markets, I would say, will find new highs in coming year, and large caps are leading now because of the FIIs are returning, and they would prefer to have a large caps first. But down the line, mid caps and small caps will definitely surpass the returns of any other asset in India, and it's time to take little bit of risk with little bit of intelligence, and make best out of India's growth story. On silver and gold, I'll have another video because that's a different topic to be discussed. So that was it now for in this video. It was just an overview of what happened in last 1 year. Overview. I did not go into any vocabulary, but that was about the domestic market and changing scenarios. I'll make another video on different topic. Thank you for watching this video. Please subscribe to the channel and share the content with your friend, relatives, and like-minded people. Thank you.